Thursday? Friday, right? Friday, post non-farm payroll, we have a gap in here. If we're bullish, okay, if we're bullish, are we looking for premium fair value gaps to sell short from? Hopefully you've been watching this live stream close enough to know that that's not what we want. So how do I know when to anticipate a fair value gap to form as an inversion fair value gap? You have to have narrative. Where are you? Are you looking for bullish or bearish? Has the market traded to your higher time frame draw on liquidity? That's this here. That's that gap on the weekly chart. So if we see a gap like this here, right here, everybody else would see that as a return into that. Let's go short and go lower. Now, if we see things like this, that already should tell you no, because this drop down here was this get sell stops taken and either put traders short or take them out of their longs. Then we have a market structure shift here. We have a gap here, and I love seeing gaps that would look like some kind of a, let me change the color here, it's wonky. All right, so we have this gap in here. That gap, when it trades up into it there, if you are just a casual viewer, Netflix and chill type of ICT student, you're going to get tripped up. And you're going to be like the Joker I just blocked on my YouTube channel that was posting stuff saying, this stuff doesn't work. It only works sometimes. This is nonsense. Folks, listen, okay? If you can't make it work, that's where it stops, where you can't make it work. You haven't done enough study to learn it yet. But it's always there. The silver bullet is every day in the times I've told you. And the things I'm teaching with market structure shifts and draws on liquidity, which is the most paramount lesson. That's the thing you need to know. Up in here, halfway point, consequent encroachment between the high and the low of that weekly gap. Think about that analogy I just gave you with the game of horseshoes, okay? Midpoint is a real good target. Real good target. Best, a perfect ringer would be at the high end. But we're consolidating in here. And we closed on Friday right around here. So we're consolidating at 430. What's the likelihood of it getting up into that high to close that gap in? Very, very low. Very, very, very low, because we're going into the close and we're going into the Friday close. So they're going to leave that portion open and trade it in Monday and or Tuesday. So you would stay bullish until it hits this level. Then once it happens, you go neutral. You sit still. Not, what do we do next? What do we trade next? You trade sidelines. That wins all the time. You can't lose money on the sidelines. That is a position. Not trading is a position. Not being long, not being short, neutral, on the sidelines, no risk incurred. That is a position. And it always is profitable. It means you have the same amount of money in your account when the day ends that you had when you started. I don't know why it's such a hard thing for people to sit still. They always have to be doing something because day trading is everyday trading to them. And it's not to a professional. It's not. It's absolutely not. So when you see things like this and you anticipate that a fair value gap would become an inversion fair value gap, meaning we would want to see price trade above, come back down in, and then rally. We want to see that. And if we don't see that, we do nothing. Because the bullish narrative that we're holding, see, in your mind, or in my mind, we fell short of the low of the gap on the weekly chart, which is this level here. And this is where I'm thinking price is going to gravitate towards. It's going to go up there. So all smart money's doing is keeps throwing horseshoes until it gets up in this area here. Every retracement, every discount is an opportunity for a high frequency trading algorithm to go long. What did I just say? Yes. Every single short-term discount PD array is utilized by high frequency trading algorithms to go long and then throw their orders into this abyss up in here, in this area up here, because that inefficiency that the average bear, the average trader, I shouldn't say bear because I'm not saying in difference to bullish or bearish, but the average person, the average trader doesn't think like I'm teaching you. They're not even aware of that volume imbalance. They weren't even looking at that. They're arguing with me. Why are you looking at gaps when the trading during that time that wasn't the front month contract, blah, blah, blah. That's exactly the reason why it works. Wake up. What are you doing arm wrestling me when I'm telling you what works and it happens? Like, I don't agree with this, so therefore let me argue about it instead of just saying, wow, this shit works. Let me just keep doing what he's showing. That's what I'm trying to convey. But it's like there's a number of you that don't want to learn. You want to argue. You want to debate. I'm not here to fucking debate. I'm here to show you how to make money and get the fuck out of Dodge in November. I'm getting back to enjoying my life. But you're wasting time all this nonsense of arguing. This is Friday, okay? Inversion fair value gap, trading and tossing the orders up into this gap, that weekly gap. And then every discount, every short-term discount, what does that mean? What's this level right here? That's 25% level of this range from high to low. These two levels, again, are that weekly gap. So we can throw gradient levels in there. 25, 50, 75. Look at the beautiful reaction there. Look how it hovered around equilibrium. See that? And then closing on the week. Two positions, scaling, long, another longs, partials, partial, and then stopped out. All of this idea of I'm trying to make a lot of money in a short period of time, that needs to go away too. I want to get a better payout than the last guy I saw on the leaderboard of FTML or My Funded Trader or TopStep or whatever. I don't know all the companies. I guess I have no affiliation with none of them. But you're doing this to make money. You're following the logic. You're doing all the things that you're expected to do based on the things I'm teaching you. If you do those types of things and you stick within the narrative that I share with my experience, when I sit down with you either on Twitter or in these videos where I do analysis or I show you where I think it's going to go next. Right now, we're at a point where I'm neutral. I'm neutral. My targets have been met. So I sit still and I let the market then dictate to me what I want to do next because it's already done its quarterly move for me. It might continue higher or it might reverse. At this point, I don't have an opinion that's hardline enough for me to say I'm going to take a trade in this direction. I don't have a target next.